Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. It's pretty quiet. I do think we're in a range-bound type of environment. And so I think we're just going to have to be very respectful of that. So let's start off with the euro. So the euro dropped today to what I think is going to be pretty key support for the day. Notice how we're going to stop short, and it seems like we're going to stop short of the lows that were created on Friday. Sorry, let me get my glasses on here. Friday, which is 2130. So I think this low around the 2150 level is going to be very important. You can see these lows right through here from last week, and that creates this little minor trend line. I think we have to keep that on the radar for today. So that's going to come in around 121.50. All right. Below that might open some downside, but 121.50 will be support. Resistance 122.50, or we have a spike high up here to 22.56. But I think that this is a descending trend line. We might be developing some sort of triangle here. So I'm going to just write down 122.50 as being resistance. And I think we just have to be respectful of that range for now. I'm not going to put it on bullish. Okay. I'm going to take it off bullish. The reason why is because we're failing to get above this resistance here. And that little probe, remember this from last week? These little probes below that trend line, kind of got me back to neutral. I think we need to be neutral for right now. I'm not 100% sold on the idea that we're going to rally through these highs in a new 2021 highs yet. Not saying that we can't do it. I'm just saying that yet. Okay. Gorkum, good morning. Good morning, by the way. Okay. Oh, one other thing I wanted to say really quick. Steve's not going to be joining us today for, following, my analysis of the majors. So if there's anything that you guys want to see, please bring it to my attention. Stelios will be here as well. So but I wanted to let you know Steve's not going to be here. So let's move along. Cable. So here's the cable. This is pretty obvious right now. 142.50, 141. And if we break below 141, then that opens up channel support to 140. But I think 141 is going to be obviously really critical here. So let's write down that number. 141 and 142.50. Now, what you're also going to notice is I'm going to flip this from bullish. I think it was on bullish. Let me just go back to yesterday. It was bullish. I'm going to actually flip it to, you know what? I think while we're above 140, we just got to keep it on bullish. I kind of want to put it in range because of, actually, you know what? I'm going to. We're going to keep it in range because of the false breakout yesterday. This does concern me right here. This false breakout that we had yesterday, could lead to a breakdown. So that's why I want to keep it on range for now. Aussie. Well, the Aussie's pretty apparent. 76.80 to 78.20. And we continue to stay in a range. Let's go over to the Aussie. I just said Aussie. As I was taking a drink, I meant Kiwi. Sorry. So the Kiwi looks like it's developing a wedge. Now this is a false breakout up here. So we have to be aware that that did create some like false upside breakout, which could lead to a lower move. But you'll notice here is a 618 retracement. So I think we should be just respectful of this high, which comes in at 73, let's just call it 73.15. And this support 71.90, which is the 618. I know, I know we have these hourly or 4-hour lows right here. I can see them all, but couldn't you just imagine this? Like imagine this. You break through that support. You drop down to the 618. Just enough to stop out all the longs, and then you pop right back up again. Couldn't you imagine that happening? I could. So that's why I think you have to be, instead of like writing down this support being 72.07 or 72.10, you have to be more aware of that 618 retracement down there, which would take us just below those levels, and then that could be enough to just create a bounce. So 71.90. $73.15, which is the highs up here. Let me remove that. And we're just going to pay attention to this wedge that's forming here. Okay, dollar Canadian. So the dollar Canadian range bound 121.50, 120. Yesterday we thought we'd come down and trade towards 120. We went to 120.06, I think, is the low. 120.06. So we were talking about the support being 120. Well, guess what? By the way, 120, 121.50, none of those numbers are going to change. And I think while we're below 121.50, we have to put it in bearish, because it's trading. It's still trading heavy, guys. I think we do have to keep it in bearish. All right, dollar Swiss. So the dollar Swiss, I know I flip-flop between this neckline here at the 89.30, but it served us well, right? And that neckline's been there since, I think we drew it out in February. So it's not like it's, this is anything new. But 89.30 is going to be support. I keep thinking we might make it to 89.11, but it's, downside's been really limited, or limited to this trend line, excuse me, or that the neckline. So I'm going to write that down at 89.30. And I know we had a little bit of a bounce, but while we're below the 200-day moving average, which comes in at 90.75, but you guys know 90.80 and 91 cents. Really, while we're below here, there's no reason to be bullish. Now, one of the things is if we start to see a little bit of if rates start to move higher, I think that the dollar Swiss will be one to respond. But obviously that's probably not going to take place until Friday, which we talked about during the FACE webinar. US dollar, Norwegian krona. We continue to find support on this trend line here. Yesterday, we wrote down 822. We went as low as like 824. I was thinking we'd stretch a little bit further. So actually that level is probably pretty good for today. We can write down 823 and resistance is 842. That's significant. We're going to keep this in range. Dollar MEX, another big rejection of this trend line. I think yesterday we wrote down 20. Yep. And then 2030. Well, today we'll write down 2002. And 2030. Support being 1978. I don't think we need to go any further than that because it's range bound at the moment. But if we can break out this down sloping descending trend line, we should be able to get back to 2030. But you're going to have to see some risk aversion there. And now you might be thinking, well, hey, are we going to even see any type of risk aversion? I'll tell you, yesterday's daily candle. This is the S&P, and we're gonna get to this analysis here in a second. But false breakout above the highs, right into previous resistance. Gravestone doji. I know it's white. The candle's white, but it's a gravestone doji. We're up right now, but it's still early. I wouldn't be surprised if we trade below 4180 today, especially after the false breakout yesterday. You see the false breakout above these highs. Okay, so let's write down 42.45 again. While we're above 4180, you have to remain bullish, but we break below this, and then I'm going to start to question. We might do this. Something like that. I think that's possible. Okay. But like I said, yesterday's daily candle in the S&P, got to think about that. Let's go to dollar yen. So I was actually surprised we got as close to 110 as we did. I was thinking there's no way we're going to get back up to 110 yesterday. I even though I said, hey, we should find some resistance if we get back to 110. I was really thinking in my head, I'm doubtful we see it, but we've come pretty close. I mean, we're only 12 pips off of that resistance. So I think at this stage, we have to look at this support here, which should be roughly 109.20. Resistance at the 78% retracement at 110.20. So I'm going to write those numbers down. 110.20, 109.20. I'm going to leave it in range. Oh, whoops, this is bearish. Sorry. Okay, let's go to the dollar index. So the dollar index, we continue to hold this support zone. That comes in at, 89.60. Resistance right now, we have to get back above 90, basically 90.50. 89.60, 90.50. Because we're holding this support, I'm a little hesitant about flipping it to bearish at this moment. Yeah, I felt the same way yesterday. All right, let's go take a look at gold and silver, because I'll tell you what, silver bounced off of support like a bat out of hell today. Look at this. I was really actually quite impressed, because that happened like this morning. Like as I was sitting there, I'm like, I didn't buy it. I was just looking at it going, wow, that was a huge bounce off of this trend line support. You can see a huge trend line support. So that means that 27.65, which is the 618 retracement, you can see it right here, is hugely important to the bulls. 27.65, and we're holding it. Resistance, let's say, since everything else seems to be doing this, let's say silver ends up building a triangle as well. So that means resistance would be around, let's call it 28.50. Gold. I think it was my chart of the day yesterday. 618 retracement, 1920. I actually think gold's going to come off a little bit here. Back to 1845 would be support. There's your 200-day moving average, same level. So 1920, 1845. While we're above 1845, you got to remain bullish. But I do think that we're a little divergent here. Bitcoin, and then I'm going to talk about I'm going to talk about a few things after I'm done with Bitcoin. And Gorkum asked about the head and shoulder and the Aussie, so we'll talk about that too. So Bitcoin is about ready to challenge triangle resistance. I think it's pretty important right here. 38,000 support, 34,000. And remember, the 200-day moving average is higher than that. So let's say 38K. The 200-day moving average is at 40. I want to say 41K. 41.3. So let's just call it 41,000. I think we have to stay bearish while we're below there, below the breakdown point, which is right here. Support is 34,000. Okay, so bias chart is done. Stelia should be here.
Yeah, I am here.
Hey, I wanted to talk really quick. Gorkum asked about the head and shoulder and the Aussie. So I wanted you to take a picture of that.
I got it.
Thank you. The Aussie dollar, we have this head and shoulder pattern. Yes, it's still there. Is it symmetrical? No. Is it still valid? Sure. Am I excited about it? No. Not until we start seeing moves down. You know, if we start getting back down towards like the 76-cent level in the Aussie, I will start thinking about it again. For now, I'm just more concerned about it getting out of this range. And you might even be looking at this head and shoulder, like something like this. This might be what you're looking at. So let's just imagine we have a head and shoulder in a head and shoulder, right? Bottom line is these necklines aren't giving up. They're not giving up right now. So it's hard to be real bearish at the moment without this neckline giving way and this neckline giving way. Are they setups? Sure. Sure they are. But are they ready to break? I don't know. I'm not there yet. Okay. Also, let's. I want to talk about the Canadian yen because I did short this yesterday. This is probably the upper end of the range. If you want to be on the short side of the Canadian yen, would be somewhere up here. You can see the pattern in play was, entry area 90.90. We are at 90.90, and I think this 161% extension of this is the, by the way, this is the lockdown move. That's the 2020 lockdown move. 161% extension, divergent relative strength. As long as we're below 92 cents, I'm willing to be on the short side here. But we'll need some cooperation with equities before that can happen. And we'll see if we can get it. But that's what I'm thinking with the Canadian yen. I just wanted to bring that to your attention. Malia asked, can you look at the New Zealand Canadian? Yes, I can. I'd be more than happy to. And anything else you guys want to see, Stelios and I can take a look at that. But here's the New Zealand Canadian. And Stel, if you have anything that you want to share with people.
Yeah, I have a couple of things to show. So
cool.
Yeah.
So this is the New Zealand Canadian. I basically just deleted everything to get like more of a view where I'm not so, I don't have an opinionated view from previous drawings. So currently, I guess in the daily charts, I'd probably be looking at it something like this. Seems like we're in a bit of a descending wedge. I don't think I could be really bullish, outright bullish, the New Zealand Canadian, unless you broke above this 88.75.
We were asked that yesterday, weren't we? Yeah.
Maybe, but I didn't look at it. I wasn't analyzing it yesterday, so I'm just kind of
no worries.
Yeah, just taking a look here. Let me just draw out a couple of things. Low to high. It's 50% retracement is holding. So now let's go more intraday. I mean, we continue to hold this 618 intraday. This is intraday. So I think, like, let me just, this is more an intraday view. So this is 87.10, 87.11, right? Maybe a little double bottom forming. So maybe if you can get above this 87.70, you can get a little bit of a double bottom reaction. And maybe get a move back up towards 88.40, something like that. I'm not super convinced about it that it's ready to turn higher, but it's possible, especially with crude oil looking a little weaker. So just some food for thought. All right, so Stelios, what do you see in this morning?
Well, we were talking about the lack of direction on FACE, and let me take the screen for, if you don't mind, for a second.
Sure. May just go. There we
go. Okay, so we're talking about lack of direction in FX and this is partly because we are in this continued grind, just like your really nice piece that you wrote for Trader Summit. This what was it called? The the slow grind higher, whatever.
The grind higher in the S&P, yeah.
Yes, which was spot on, I think. And unfortunately, nothing changed since then. So, what do we do? What do I look at? Because I'm not a day trader. I don't scalp around. I have very little on at the moment. People know I've got, I'm long gold, silver, and miners, and a uranium ETF as well, and a rare earth metals ETF. But basically, I'm, apart from metals and, related instruments, I have nothing. On currencies, I have nothing. And what I think is going to be the catalyst, obviously barring an event like COVID, like we had last year, which came out of the blue, barring such an event, groundbreaking event, I think the catalyst is going to be yields. Once again, it has to be for us to see some kind of move in equities, in the dollar. And we know how the dollar moves everything, right? So you want to see the dollar moving first before other currencies, pick up steam as well. And I think the one I'm looking at is obviously 10-year US. And, I'm looking at this daily chart, which goes back a couple of years. And we had this, we had this spike during COVID. We went down to, what was it, 40 basis points in the 10-year or something like that. And now we've come back down. So yields are up again at around 160. And we seem to be forming, we had this, pretty impulsive move down here in early February, March this year. And now we're kind of consolidating in what I think looks like a bear flag. But I think that if we do break lower, then the yield is going to go towards 180, 190, maybe 2%. And that, in my opinion, is going to be a good enough move for us to see finally some two-way action in FX and equities as well. The question is how long is it going to last? How deep is this going to be? Obviously, nobody knows. But I think that's what we need. And until we get this, I see absolutely no change in this trend. End of story. And also, if you look at the Bund, something I've been looking at, you guys know, for a while, I caught the short quite nicely, but now we bounced off support. And, we're probably going to grind sideways for the next few months, unless I think, unless we see the 10-year US break, then the Bund will have to follow suit. And then that's a different ballgame. So, to summarize, we are seeing inflation picking up, CPI, PPI, cost of anything is going up. So theoretically, this should persist for a bit. Is it going to be really transitory? I don't think so. And then, the Fed might not want to move, might not want to hike or tighten, but the markets, they won't care. I think the markets will, the bond markets are huge, and, the bond traders are usually right. So I think that we're going to see a move in bonds, and when we do that,
there was an article in the Financial Times, and I put it in our chat room. I put it in our chat room yesterday about the bond vigilantes is actually the Fed, which is true. Yeah. But the thing is one thing that they were saying is the market's only going to be able to ignore higher rates for so long, and cash is going to become king soon, and rates are going to go higher, basically, is what the FT article was saying. And I found that rather interesting, because I do think rates have to move higher at this point, whether you're talking about inflation or the economy just rebuilding its, getting back to normalization, if you will. I think rates have to go higher from here.
Yeah, I think we should ask ourselves this question. If the Fed's balance sheet was not, trillions upon trillions, and, every central bank's balance sheet was not that big,
right,
would they not have already hiked? I think they would have.
Yeah.
With these numbers that we're seeing, they're already behind the curve. And yes, they say it's transitory. But in any other circumstance prior to 2008, I think they would have hiked already a lot. So, yeah,
Stelios, I agree. Gorkum asked about scalping the gold right here, and since we're talking about scalping, I needed to mention this just because we're here, and then we can go back and talk about rates, because I agree with you. He asked, is gold a good scalp short here? I think if we just went past the 618. I think anywhere in this area between 1907 to 1911, like up towards the 78% retracement, I think this is where you have a backstop right over here for risk. So I think somewhere up here, either where we're at. Oh shoot, that's not what I want to do. Either here or either here or somewhere up here, I think is a decent short. And if we get back below this little breakout point, like let's call it 1905 or so, then we should reverse here. I think that these are all areas to be on the short side of.
I actually agree, and even though I'm bullish in the medium term, I think such a move is probably a very good risk reward to the short.
Yeah, I mean, just for now, and like I said, the yesterday's outside day candle. This is my chart of the day from yesterday. The outside day candle, and knowing that the 618 retracement is right above us at 1920, I think it provides you a lot of backstop if you want to be on the short side, and knowing that non-farm payrolls in a couple of days, you're going to get some people that have been long gold that really haven't been paid over the last week. I mean, it's up a little bit, but really not up a whole lot. They're probably going to be like, right, man, I'm going to pull this off ahead of the jobs report on Friday. Plus we have also some, I think ADP is tomorrow since this was a shortened week. We
It
have
is tomorrow.
ADP.
Yeah.
Yeah, ADP. We'll have weekly employment claims. We have some ISM numbers. Yeah. So going back to your conversation on rates, Stell, as far as rates go, I think that rates under normal circumstances, they should be higher, right?
Yeah, and for people who know, I was a US dollar and sterling interest rate swap market maker. So and in the short term swaps, excuse me, so 0 to 2 to 3 years, which really got affected by short term rates by the Fed and Bank of England hiking, cutting. And I traded that from 2002 to 2012. So I remember the hiking cycle to 04, 05, and they were, we had much lower rates. I mean, inflation wise and data wise, and they were already hiking. So I think under any other circumstances, they would have already hiked a few times, but clearly the situation is so over leveraged, so the debt pile is so big that they know it's going to have a huge problem. They're going to create a huge problem, and they're stuck in a corner now. So
yeah. So
what do they do?
Well, they have really boxed themselves in the corner. I wonder how many times they actually have that conversation, like, how do we get ourselves out of this pickle?
Yeah, and the more they wait, the more real rates get negative, because rates will increase. The markets are gonna 10 years gonna go higher and all that. But if inflation spikes higher like it is spiking now, I mean, real rates are gonna go very, very negative, and that's one thing which I think is very supportive for metals. And actually, they should have been a lot higher, I think, on the back of that. And it's frustrating for longs not seeing gold a lot higher.
I really think a lot of the luster of gold and silver has been taken, and the spotlight's been taken by cryptos.
I agree 100%.
Whether or not you believe they're a replacement for gold or silver, I think that they've taken a lot of the attention away from that idea of having, I need a place to park my money, asset class.
You know what, Blake? Sorry, carry on. I'll tell you.
No, I was just going to say, because if people say, oh, we have inflation coming, I got to have some sort of inflationary hedge, and I've read that traditionally inflation hedges is going to be you got to buy gold and silver, but what's the new gold and silver? Well, it's crypto. Great, I'm going to buy some of that instead.
Yeah,
go ahead.
I have a friend who he's not a trader by profession, but he likes to trade. He's in IT, and for years he's a very good friend of mine. For years he was asking me, what do you think we should be doing about this and that? And I've always told them, I really like to be buying dips in silver and gold, but mostly silver. And he's been following me over the past years, and it's been going well. And last year, he hasn't been doing anything. He just said, I'm just going to be punting crypto. And he's been going long crypto, but taking profits, and then going long again and taking profits all the time. And he's like, today he messaged me, he goes, oh, I was long Dogecoin 2 weeks ago, and I'm up 35%. They hit my limit. I'm out, and I'm sure he's not the only one who's doing that, and it's not from an investment thesis that he's saying, oh, I'm going to replace gold and silver with cryptos. Of course not. But he wants to get some action. And the action you're getting with cryptos is insane.
Or AMC. My son bought AMC yesterday.
AMC. Oh, wow. They're up like, what, 500%?
He bought it at $30. Yeah. He's trading a Robinhood. And my 14-year-old son got long AMC yesterday.
Wow.
I found out.
We should hire him. We should hire him.
I seriously, I'm like, what? And he was like, He came running from his friend's house. He was playing Monopoly last night with his friends down on the next street over. He came running home to show me that after market close, AMC was trading at 40.
Wow.
This is my 14-year-old son.
Yeah.
Well, at least he knows where the action's at. It's
Yeah.
there, Dogecoin, and everywhere else. So really quick, IWM, Amira asked about IWM. Let's take a look at the Russell, which is underperforming at the moment, but we're not too far off of our highs. I mean, there's no reason to be bearish here, but I, would feel a little nervous about being bullish because it seems like we are near term in a range. So if, you just basically did something, if this becomes symmetrical, it's going to look like this, right? I wouldn't be necessarily, if you were going to short, then where your risk is. The risk is maybe above today's highs, not too far away from where we're at. But if you want to be long, I don't know if you want to be long going into this trend line either. SMH. I mean, it looks just like the IWM. I wouldn't want to be long up here until we broke out. I think we're consolidating. It looks very, very similar to everything else that we're looking at, right? I mean, if you're long, just don't give it much risk because, you're just assuming there's going to be a breakout here. IBB. Yes, biotech index. I mean, you can't get away from the 50-day moving average for the last couple months. So, what makes you believe that you're going to be able to actually, break away from the 50-day moving average? Well, we haven't been able to do it in a month. So those are my thoughts there. All right. What else do you see, Stelios? Anything else?
Unfortunately not. As we said before, it's kind of going sideways on a lot of things.
Yeah, I agree. And I shorted some Aussie New Zealand yesterday at 60 is where I started establishing my trade. It was like 64 is where I got hit on my first chunk of it. I hit on another chunk at 106.90. 106.95 I think it was, and so it's only 2/3 of my size, but if you guys have been following my analysis since last week, I've been waiting for the Aussie New Zealand to bounce back towards 107. We're stalling pretty much where we should. I'm not sure if we're going to get up to the 618. We're already stalling at the 50% retracement. If you want to be a little bit more conservative and say, well, I'd just rather wait for a breakdown. Remember, we do have Aussie GDP tonight. That will be that Aussie GDP, I'm sorry, that was last night. I think we're past the data. So given the fact that we fell following the beat in Aussie GDP, then I guess all we have to do is wait for a move below 108.60 or 106.80 and a move back below 106.80, then that would signal that we're probably ready to roll back over again. So anyway, just some food for thought there. Stelios, if that's it for you, I'm going to go ahead and close us down. Steve will be back tomorrow. He had an errand he had to run. And guys, I'll see you at Lorraine said, Blake, maybe in addition to the show, your son's pick of the day.
Yeah, I would pay for that actually. Yeah.
Yeah, right. He's dude, him and his buddy, they're 14 years old. They talk about trading all day long. I mean, it's crazy, right? It's nuts.
Yeah.
Anyway, all right, guys. Hey, have a great one. I'll see you on the daily roundup. And that'll be in just a couple hours from now. So you guys have a great day. Good luck today. And for those of you not in the chat room, I'll see you in the chat room. Talk to you later. Bye, Stelios. Thanks,
Blake.
for everything. All right.
Bye, everybody.